Let's kick off with Peter McGuire, CEO of XM Australia. Peter, just to give a setup for you, the World Bank sees global growth declining again next year, but Asian GDP on an average still above 4%. Anywhere else in the world, that's great. Why is that not great in Asia? Your thoughts on the wider macro outlook for Asia in this year ahead?
Well, good morning, Sean, and greetings from Sydney to everyone, and thank you for the invite. A couple of things on that, and there's no doubt, yes, 4% is a healthy number when you're looking at the big picture, and you'd say, well, wow, if we're going to have 4% in Australia or 4% in the UK, for instance, or Eurozone. The issue is that they export a lot of it from an internal demand picture that is very, very different to an export-driven model. An export-driven model needs consumers, and this is the issue. So we need to internalize all of those growth structures into that energy of Asia, which may happen. I mean, when you're looking at what's going on as far as oil consumption, you're looking at the overall themes. I don't like where if I look at the stock market as an indicator, because we're down from 4,200 to 3,200 in that 1 year window for the CSI 300 out of China. So that's telling me something, Sean. That's telling me that it was either overcooked to the upside, which you would have to say it was, and it's being spanked down heavily, and it just continues to fall. While you've got strong growth across Japan at 33-year highs for the Nikkei, which is quite extraordinary. So where is it? Well, I've got to say,
what explains that difference? I mean, the Nikkei, is that a weak yen story, or what's giving us this bionic move in Japan, sort of an outlier, if you like, to the giant that is China?
Well, I think first off, you were sold so heavily off in '89. You went from 39,000 points for the Nikkei all the way down to a low of 8,000. Now it's had a tremendous move up. We're up 300%, 400%. But the reality of the matter is it was so heavily sold off. Are we going to go through a similar phase and see China in some ways? I'm not suggesting copying Japan, but is it going to have further downdrafts in 24, continual downdraft as far as equity markets, comparing itself to the powerhouses, say Japan? Consumption, Sean, we've got 90 million apartments and houses overhang as far as the property sector. It's fully cooked up as far as property. So
in China, you're saying 90 million unoccupied apartments in China.
Yes, and homes. So that's the iron ore story, and we're dependent upon that from an Australian mindset, exporting and coal and so on, everything into China. A lot of that's already been taken on board and used and utilized to construct these properties, but it comes down to the debt issue as far as who's holding the debt. So I look at China and I say, I think it's ticking along reasonably okay, but it hasn't come out of the blocks post-COVID like really in some ways the US has, and certainly their stock market has been very, very hammered.
Let's go to Vibhuti Garg, Director South Asia for the IEEFA. Vibhuti, can India pick up the slack that China is stumbling with at the moment? This growing narrative, everybody loves a headline, India's the new China. On energy-wise, at least, can India pick up some of that demand slack that we have seen over the last 20 years from China, where India emerges now? Your thoughts on that?
Definitely, I think India is emerging as an outperformer. While in 2023, we saw that there was underwhelming demand in China on account of several factors. But as far as the Indian growth story is concerned, we have registered about 6.5% of economic growth. And that is actually kind of one of the big drivers for our energy demand growth as well. And if you see the projections, I mean, India is likely to account for 25% of global energy demand over the next 2 decades. So that's the scale of demand that is likely to come from India. And given that it's one of the fastest rising economies, it is benefiting from the working population, expanding industries ranging from agriculture to services, and now more even developing more and more manufacturing base in India, which is hugely energy intensive. So we are seeing that there'll be a lot of demand coming from India, and also which will be like an alternative to China. We are seeing similar trends even in other countries like Vietnam and Indonesia, which are also kind of benefiting not only from the supply chain shift away from China, but also as hubs supporting China's new high value tech manufacturing. So definitely the outlook looks positive, even there is some level of demand going down in China, but other Asian countries are fast moving and are on the verge of high economic growth, which actually translates to high energy demand growth as well.
Let's go to Ram Narayanan, Director VP Strategic Market and Business Development at Vedanta, also sitting in India. But Ram, I wanted to pick up on that last point of Vibhuti and get your views across the wider spectrum of Asia. We do have the World Bank forecasting better growth in 24, led by Indonesia. Can these other secondary nations in Asia, population-wise, but still massive, it's Indonesia, over 200 million people, move forward with a sort of a new dawn of growth as China is moving in the other direction? I mean, that would require a decoupling, Nirali. Your thoughts on the outlook for the year ahead on these wider Asian mid-sized economies?
Thanks, Sean. Well, apart from China, I'll come to India later. Look at Indonesia. A good amount of investment is going to Indonesia, especially given the fact that Indonesia is a natural resources powerhouse. Indonesia has imposed ban on some of the raw material exports because it won't attract investments into Indonesia. We see a good amount of investments coming in the metals and mining sector where I work in. And a good part of the money is coming, in fact, from the Chinese companies. So therefore, Indonesia, along with the 250 million population, plus along with a good manufacturing base and also having a good natural resources base, is certainly a powerhouse in the days to come. So therefore, I fully believe in the Indonesia growth story. Secondly, coming to Vietnam, Vietnam has been in the news for the last maybe a decade and a half. Because it was seen as an alternate to China, even though it's not as big as China. The infrastructure development in Vietnam has been excellent. And a good amount of investments from China as well as from other Far East Asian countries has gone to Vietnam. And Vietnam has been very smart enough to tie up with various free trade agreements with the various countries across the world to boost its trade. So it's seen as an export powerhouse. So therefore, Vietnam growth story is also long and a sustainable story. So now coming mainly to India, picking up on what Vibhuti said, India's a great growth story. It's a sustainable growth story. We had 6.5% of growth. World Bank is talking about another 6.5% of growth, while the internal estimates it will cross 7. And apart from one of the major areas where India grew was because of the government investment last year. And this year, after the elections, even the private capital expenditure also expected to pick up in India. So therefore, like India is also a sustainable long-term growth story, and also given with the fact that it's got a huge working population, the young population. So therefore, if you add up all the three major nations, I would add, if you add Indonesia, Vietnam, and India put together, certainly these are the three countries which are going to drive the growth in Asia. And if you talk about decoupling,
go ahead, on that decoupling. I mean, these nations rising while China moves in the other direction, decoupling of sorts.
Exactly, that's right. China is moving in the area of energy transition and also as to drive its next wave of growth. But all the other three countries, India, Indonesia, and Vietnam, are still focusing on manufacturing. And secondly, India also has got a big services industry, like given its IT industry and all. So therefore, and all these countries are also looking up to the Western nations as well as the Middle East nation, USA, to drive its economic growth. So a good amount of decoupling has happened and will happen in the days to come. And all these three countries will have their own individual growth stories. But on the whole, if you ask me, I'm not talking just because I'm from India, but the three nations, Indonesia, Vietnam, and India, given the fact they're looked as alternates to what has happened in China in the past few years, they are a great growth story in the days to come.
Peter, taking the view that there's a growing narrative of peak China. We come out of the COVID period in 2023. There's a lot of this time last year was the year of two halves. China's going to come roaring back in the second half. we start 2024 with the sort of the penny dropping, the dawning realization perhaps that we have reached peak China. That's being advocated by the Eurasia Group. All the different data points you want to point at would indicate they're in a retreating posture, whether it be the Chinese labor force has become too expensive, the more larger questions of water stress, demographics, the supply chain moving away from China. Even geopolitically, we're seeing the Philippines and other nations ramp up their military architecture to counter the robust geopolitical posture of China. Your thoughts on that thesis for 2024, that the penny finally is dropping of peak China? Do you advocate, do you support that narrative? If indeed it's true, what does that mean?
Well, Sean, another part of that you have to look at comparing itself to Asia and primarily India is an old population in the sense of a demographic that is an aged older, much older than versus someone that coming out of India, whereas the average age is significantly lower, and this is across pretty much the Asian footprint. So China, with that one-child policy, we all understand that now, you pay a price, and the price you pay is normally around about 2025. That's when I went to business school. They said that's really going to impact as far as growth numbers moving forward. This is 2 decades ago. I remember at Wharton, we studied it intensely because they were worried about it. And now it's on your doorstep. So where do they move forward? It's going to be very tough. You've got, and the civil unrest, and of course, how do you keep employment for such a large component of 18-year-olds that come out of school each year? Where are they working? What are they doing? And all of these sort of factors that go into trying to keep 1.4 billion people relatively satisfied and without causing too many dramas, Sean, across the fabric of what China is. So yes, I think that they've got their hands full. I think.
I mean, that's a major point. If indeed we do think of peak China, and particularly in the area of sort of the manufacturing industrial economy, that's a massive for Australia. I mean, you dig up everything out of the ground and send it there. What are you going to do with all that iron ore, all that coal, all that everything?
Well, it's got to go somewhere else. Someone else in Asia will probably, as far as the consumption chain's concerned, you look at the linkages and you see, can it be produced somewhere cheaper? And is that cheaper going to be possibly Indonesia, or is the labor component of the Philippines going to be more receptive versus China? These are the conditions that anyone has to look at, and I'm not sure how Australia tackles that. That's another argument altogether, because we've built our whole country on exporting to China. So I think that there are many moving parts to all of this, the fabric of the chain, that need to be, they'll unravel in their own way over the next matter of years.
Vibhuti, I want to just sort of challenge the thesis of India sort of picking up the slack here, or potentially. I mean, China in its heyday was growing at 10, 12%. India's struggling to get to 7, dropping. It was at a 7-8 handle last year, early in the day, and in 22, some indications that we were going to be punching at the high single digits, but we're now just in the 6s. I mean, everywhere else in the world, you sort of bite your hand off for 6.5% growth, but India, a population of 1.5 billion people, many still in a very basic economic equation, is 6.5 enough to move the dial on India?
Well, I think if you'll compare during COVID years, the numbers dropped down substantially. So again, the base year came down. So I think if you'll compare it from that perspective, and if that becomes your like a benchmark, then I think the economic growth that we are demonstrating is massive. But definitely, I think before COVID years, India was actually on the trajectory of very high economic growth. But all these pandemic-related disruptions, as well as now the war-related geopolitical things, which are hampering globally, and India is also definitely getting impacted to an extent where, also, if you will look from the perspective of India is inviting a lot of companies and a lot of investment, foreign direct investment from different countries. Different states are holding these big kind of conferences and workshops to invite more manufacturing being set up. So all these have started, which might lead to much higher economic growth in the coming years. But as I said, in between, because of these disruptions, we really kind of got the hampered, and the base became much more smaller, and that's why I think it's going to take some years to revive that kind of a demand. But definitely, I see that we are going on an upward trajectory, and we will witness much higher demand compared to 6.5% now.
Ram, just picking up on that, but all again, I wanted to sort of widen the lens across Asia a bit and look at the question of energy demand, energy imports, oil imports in particular. We're seeing now Asia being the destination for, obviously, Gulf Arab oil has been for a long time. Russia, now the new supplier into Asia, given the sanctions in Europe on Russian oil imports, and the US now becoming a significant exporter to Asia. I'm wondering, how do these three, obviously major actors, and the biggest one, I suppose, still is the Gulf Arab exporters, but nonetheless, how do these three find market share? Do they start butting up against each other? How do you see that playing out in 2024 in the prism being a declining China?
Well, Sean, you need to add Venezuela to it also right now, with Venezuela also opening up. Anyway, Sean, as you rightly said, now Asia is a preferred destination for all the major oil producers because India and China are the world's largest oil importers. Russia, obviously, because of its pricing, has taken a significant market share. India's imports almost went as high as 45%, which has dropped around 35% as of now.
And are you making the same mistake Europe did, becoming over-dependent on one supplier?
Well, I think I spoke at the same forum about a few months back. I said at the time that, the Russia's market share is bound to decline because of two reasons. One is, of course, the Middle East producers are not going to be happy about losing market share. That is number one. And second thing, I think I heard in a couple of sessions before, there is an issue of payments with Russia. Because of all the sanctions with Russia, like how do the Indian producers pay for all the Russian oil? Obviously, if it's a rupee-ruble trade, there's going to be an issue in terms of payment of rupee and various other modes that were exported, including dirhams. So therefore, the Russian market share was bound to go down. And secondly, India and China being a preferred market for all the oil producers, we have seen that Gulf oil producers have dropped the premium in the last couple of days. So that is number two. And US and including Venezuela, they have been exporting here before, and it's bound to increase right now. So therefore, there's going to be let's say a tough competition amongst all these players in the Asian markets, especially China and India. But the fact is, we look at 5 years back, Russia was a very, very minuscule player out here. And given the way the Russians are pricing their oil, so Russia is bound to be a significant player in the days to come, until they change the pricing policies. So therefore, the way I look at this, Russia will be a major player. Middle East was always a major player, and is bound to be there. And the US and other people are bound to find pockets where they can have their presence out here. On the whole, if I look at it, the pricing is going to be competitive. So therefore, there's going to be quite a good competition, a tough fight amongst all the major oil producers for the market share in Asia. That's where I look at it.
Peter, I mean, 2024 starts to feel like it's, the year in which, to pick up on that point that Ram makes, that it's the year in which one says, oh, this Russian oil isn't a temporary thing. It's now a semi-permanent presence here, just like the US oil. Does that change the dynamics? We saw stress in OPEC Plus at the end of last year. Saudi and Russia seem to be finding some, elbow problems there. Saudi still sort of trying to manage a market to see a higher price. Russia looking to produce and export as much as they can. Your thoughts on the sort of Russia becoming permanent actors in Asian oil markets and the Gulf Arabs sort of coming to terms with that? What does that look like to you?
Well, I think, Sean, that naturally they've got to expand, like any producer, you've got to expand your customer base. And as far as your balance sheet internally.
Yeah, but if China's declining, how do you do that?
Well, you've got to look at other markets. you've got to take on board, and you've got, as Ram said, you've got that huge growth coming out of Indonesia, consumption there, 220 million. And the other side of that, of course, is that it's a large, expansive nation with many islands. So that takes ferries, it takes more consumption as far as crude oil and energy and diesel and distillates to get that to transport goods. Second part, of course, is, yes, I think Russia, they're really starting to, under Putin, the mechanism of, they're not sitting on their hands here. They want to build up, and they're 24. They've got the ongoing situation in Ukraine that seems to not gain that much attention anymore, but that's certainly something for them to think about. And the overall thoughts as far as how that economy survives in 24. You've got relatively weak base metal prices compared to where they've been historically from an export model. So they've got to see how they can compete in these sort of environments with energy prices in the 70s and 75s is not where Putin wants to be. They want higher prices, and they'll probably push a lot harder through the BRICS and, of course, being alternative currencies for payment, Sean, Bitcoin, gold, and so on.
On that point, Peter, just looking at currencies through 2024, we had a strong dollar narrative in 2023, which sort of eased off towards the end of the fourth quarter and so forth. What do you think? And obviously, a strong dollar has real consequences for consumers in Asia buying all these commodities, oil in particular. What's your outlook currency-wise for that repeating, or will it be a soft dollar year?
Well, remember that there was a couple of things on that, Sean. The last 2 months of the year, well, if you roll it back 3 months, the fear of missing out was the equity markets, and it was just off to the races. November and December, extraordinary growth, and that fear of missing out. A couple of things throw into that. First off, the tax year, you don't want to be selling because you'd have to pay capital gains come April. So you wait till the new year, and that seems to put that away. Remember, you had the Israeli situation in Palestine, 7th of October, and we had the war premium built in, and US dollar went for a run, equities went for a run, and it was just one-way traffic. That US dollar's been sold off now, and it's in that 102, 102.50 sort of handle. And there were talks that we're going to see 5 or 6 rate cuts by investors. But the Fed's got a different view, Sean. We saw that inflation actually went up in the Eurozone last week, and we've got the numbers coming out tomorrow in the US. How is that CPI going to look? And it seems to be a different viewpoint as far as the Fed and the investors. So have we got blast off in at March? Have we got blast off in April or May as far as a rate cut? We still sit here and go, I don't know, maybe not. So these all impact naturally dollar.
Dollar remains softer than one would have seen on the average last year. Vibhuti, just picking up on that point, getting a closing comments here about the wider outlook for the Asian story through 2024. The question of our session: what is the outlook for Asian energy demand in 2024 as China stuck in the doldrums, bullish or bearish? But Vibhuti, your thoughts on the wider narratives? This big year for India, elections coming up, the other things to look at there. Obviously, speaking of the Russian situation in Europe, India has been a big winner on the oil front. Does it continue to be? Asia be a big winner as Russia looks to send all of its commodities to the Asian markets?
I think you're right, with elections happening in most parts of the world, including US, India, Russia, and also other countries. So that will define the kind of trajectory of, the transition that these countries will be focusing on, because there is a lot of technology transfer and finance transfer that happens between the countries, and the individual countries' focus will drive which pathway these different countries are going to adopt. So I think the big things to look out is I'm definitely more bullish on Asia's demand because all of them are growing economies and they have huge energy demand. So that being there, but I do believe there will be a shift while we have been talking about looking at alternative countries for oil demand. But I feel given the kind of focus that has been on electric vehicles, so the overall demand is likely to go down because now there will be alternatives to oil, which didn't exist till now. So different countries will be going for that kind of push for electric mobility. Biogas is also being touted as a big fuel to meet demand. So I think there are a lot of focus, especially from India. They have formed the Biofuel Alliance with India, Brazil kind of hosting that. So I think that's another area to look out for in comparison to oil and gas. So there are other fuels that are gonna be kind of coming as alternative to that. And definitely green energy will, including renewable energy, will continue to grow worldwide in 2024, which is kind of boosted by government incentives, supportive policies, and a global push to decarbonize economies. We are seeing solar is at an all-time, the costs are at an all-time low. We are also seeing the cost of storage going down. So definitely with better handling of the supply chain issues, with all these learning curves that we are seeing on the technology front, the cost curves. So renewable energy will play a big role in 2024 going forward. So yeah.
Ram, last word to you on the outlook for Asia. I mean, we could be in a perfect storm of bullishness in some regards, hearing the collection of comments here: lower dollar, lower oil price, the macro engines, as you mentioned, India and Indonesia. Your thoughts, and on the question asked, but also on that idea that Asia could be the winner here, even in a slower global growth story.
Obviously, like given the fact that Europe has slowed down, US is also sort of not many great signals coming out of US, despite the fact they might go for interest cuts. Asia certainly will be a big player right now in 2024. From an oil demand perspective, like China, like despite the fact it's slowing down, there's not a great downside to China, so that will be there, and upside from India and Indonesia. So therefore, the oil demand from Asia will be a big factor for all the oil producers. Looking at other commodities, let's look at coal. Like Russia is trying to sell its thermal coal as well as coking coal into Asia. It is in fact doing it right now. So therefore, they are looking at on the Asian markets in a big way. And given the fact that the macroeconomic indicators for the Asian economies, apart from China, are looking very, very positive, and let's say a weaker dollar to add it on top of it. So therefore, Asia will be, I think, one of the biggest biggest victors in 2024, both from a macroeconomic perspectives as well as from energy demand. We'll also have to factor in the coal markets also in Asia. Despite the fact that we're talking about green energy, still coal is going to be a predominant player for the energy needs of the big countries, including India, China, and LNG for Japan and Indonesia, which is based on coal. So therefore, like you look at the energy commodities, base metal commodities, as well as from a macroeconomic perspective, certainly Asia is a market where everybody is going to have their eyes on. And I can look at it like many of these companies have opened up offices in India. So therefore, certainly they are looking at India and Asia in a big way. So certainly I'll agree with the fact that, Asia is going to be the market to look for in 2024 as the leading market for all the.
Even I mean, it's ending on a relatively positive, bullish note for Asia, having started with a fairly bearish one with the outlook for China. And of course, everybody tends to look to Asia through the prism of China. And maybe what we're hearing here is bullish is the view of this room, that there's more to Asia than China. Now there is the Indonesia story, obviously the India story. We've had Vietnam for a while. And so new engines of growth that can certainly benefit from some of the factors coming through in 24, lower dollar, lower commodity prices. Thank you so much. That ends our Asia section of this year's Global Energy Outlook Forum. We'll move to the Middle East in half an hour, tackling what, of course, is a bit of a sober reality. Could there be disrupted energy supplies coming out of the Middle East with all of the geopolitical turmoil at the moment? That will be the first session in the Middle East. But Peter McGuire in Australia, thank you so much. Ram Narayan in India, thank you so much. And Vibhuti Garg in India as well. Thank you for your thoughts and insights today.